Have you checked your bank account lately? Noticed anything strange? A sudden deduction, maybe £300, gone without explanation? You're not alone. All across the UK, pensioners are waking up to the same disturbing reality. A £300 deduction silently withdrawn from their accounts. No warning. No clear message. No letter from HMRC. Just gone. And what's even more concerning, most people don't even know why. So what's really going on? Is this a system error? A mistake? A quiet new tax rule no one warned you about? Could you have been targeted by a silent overpayment clawback? More importantly, can you get that money back? Well, in some cases, yes. But you have to act quickly, or you could lose it forever. So before you ignore that missing amount or chalk it up to the system, stay with me. This could be one of the most important financial wake-up calls you've had all year, and it might just help you recover money you never even knew you were owed. Welcome to Pensioners Power, your trusted source for everything you need to know about pensions, retirement planning, and financial wellness. Here, we cover the latest news, expert insights, and essential updates to help you maximize your retirement years. Whether it's understanding pension schemes, making the most of your savings, or staying informed about financial changes, you're in the right place. If you're new here, don't forget to hit that subscribe button and turn on notifications so you never miss an important update. Now, let's jump right into today's topic. Let's start with the facts. Over the past several weeks, hundreds, possibly thousands of pensioners across the UK have reported seeing unexpected deductions from their bank accounts. The amount? £300 in many cases. It's not a scam. It's not a fraudulent charge. It's something far more frustrating, a real deduction from HMRC, taken under the label of adjustment, tax correction, or recovery. Now imagine you're checking your statement on a Monday morning. You're expecting your usual state pension payment. You've budgeted carefully for the week, maybe to cover your council tax, groceries, or the upcoming electric bill. But then something's off. That £300 you were counting on, it's simply not there. No email, no phone call, no letter. Just a vague line item, RC, AJ, or tax code change. That's it. No explanation, no breakdown, no chance to ask questions before it was taken. Sound familiar? If so, you're not alone. Now, let's unravel the mystery. This isn't a random charge. It's part of a wider, deeply flawed system of tax code reviews, benefit overpayment recoveries, and automatic adjustments that often happen without your knowledge. Every April, at the start of a new financial year, HMRC reviews millions of tax codes across the UK. This includes pensioners, especially those who receive the state pension, have private pensions or annuities, claim pension credit, attendance allowance, or other income top-ups, received cost of living or energy support payments in the last tax year. Now, here's the problem. Some of those cost of living and energy support payments were mistakenly treated as taxable income, but in many cases, they weren't supposed to be. That error results in overpayments, as the system wrongly believes your total income is higher than it really is. Later, HMRC attempts to correct this by taking the money back, often in one lump sum. And that's where the £300 deduction is coming from. This doesn't affect every pensioner. But if you fall into any of the following groups, you're at significantly higher risk of seeing this deduction. You receive the state pension and a small private pension, or other income, interest, dividends, etc. You were awarded cost of living payments or pension credit last year. You started or stopped receiving certain DWP benefits. You have recently moved home, changed banks, or updated any income details with HMRC. You were previously under the tax-free threshold, but have since crossed it without knowing. Even worse, Many deductions are related to errors not made by you, but by HMRC or automatic systems that fail to process your benefit changes correctly. It's not your fault, but you're the one paying for it. Let's talk about what this really means. This isn't just about paperwork or numbers. This is about people. Real people on fixed incomes, losing access to hundreds of pounds they rely on. Take Margaret, 74, from Birmingham. She noticed the deduction on a Tuesday morning. £300 gone. She called her bank, who told her it was an HMRC deduction. She'd heard nothing from HMRC. That week, she cancelled her weekly grocery shop. She skipped lunch to make sure her heating budget stayed intact. Or George from Devon, 81 years old. He lives alone and depends on a mixture of state pension and pension credit. When £300 disappeared, he assumed it was fraud. When he learned it was HMRC, he felt powerless. George told me, "I paid into this system my whole life. I feel like it's stealing from me in retirement." And he's not wrong. So how do these errors happen? The root of the problem often lies in tax codes, those little combinations of numbers and letters that tell HMRC how much to deduct from your income. For example, a standard tax code might be 1257 LL for those with the full personal allowance. A pensioner receiving certain benefits might get BRK codes, or codes that incorrectly treat benefits as taxable. If your tax code is wrong, everything else is wrong too. And here's the shocking part. Over 800,000 people received the wrong tax code last year alone. Thousands of pensioners were overcharged as a result. Many never noticed. Now here's the hope. You can challenge this, and you can win. Let me share a few success stories. Evelyn, from Glasgow, she challenged the £300 deduction. HMRC reviewed her file and found her tax code wrongly included her cost of living payment as income. She received a full refund and a £50 goodwill payment. Alan in Norwich, over 18 months, he lost over £800 through small monthly deductions. When he finally called HMRC, they reviewed his account and found errors in how his private pension was reported. Result? A £970 refund, plus tax code correction going forward. June and Derek, a retired couple in York, they spotted a £300 deduction and acted immediately. After 6 weeks of back and forth, they received £560 refunded because HMRC had included a non-taxable attendance allowance in their income. These aren't isolated stories. They're happening now. And they prove one thing. If you challenge it, you might get your money back. So let's get practical. If you've seen a deduction, or even if you haven't yet, here's what you must do to protect your money. Get your tax code. You can find it on your pay tax coding notice, on your pension statement, online through your personal tax account. Understand what it should be. Use HMRC's free tax code checker or speak to their pensioner helpline. HMRC Pension Helpline 300 200 3300. Say, "I believe my tax code may be incorrect." Check your bank statements closely. Look for any deductions labeled HMRC Adjust. Tax correction. Code adjustment. Even if it's small, £20, £50, £300, it could be the start of an ongoing series. Request a breakdown from HMRC. Write or call and request a full breakdown of any deductions made in the last 12 months. File a formal challenge if needed. If you believe a mistake was made, write a complaint. Request a full review. Ask for a Section 9A inquiry if necessary. HMRC is legally required to respond. Ask for compensation. If the error caused you financial harm or distress, you may be entitled to a refund, a correction going forward, additional compensation for distress or inconvenience You've worked hard your entire life, paid your taxes, contributed to this country. You deserve retirement with dignity, not financial surprises. A silent £300 deduction might seem small to the system, but to you, it's a week of groceries, a warm home, or peace of mind. You have a right to understand every penny taken from your account, and you have the power to stand up, ask questions, and demand fairness. If you've been affected, act now, and if you haven't yet, check anyway. Because even if it's not £300 today, it could be £150 next month, or £50 every month going forward. And unless you check, you may never know. Thank you for watching Pensioners Power. If you found this video helpful, be sure to give it a thumbs up and share it with others. Stay informed, stay engaged, and we'll see you in the next video with more insights on the issues that affect the UK. Take care, and don't forget to subscribe to my channel for all the latest updates.